Hey guys, and welcome to today's video. So in today's video, we're going to be discussing the market makers reserved liquidity. Some of you may be wondering, what is the market makers reserved liquidity? So in today's video, I'm going to be sharing with you the insight into price action on how to identify the market makers reserved liquidity and why they actually have reserved liquidities in the marketplace. And this can actually help you improve your price action anticipatory skill going forward, and also help you know when to stay out of the market and help you manage your position. So without further ado, let's get right into it. So you can see the markup on the screen right here, and this area right here, which this yellow shaded area right here or brown shaded area right here, is the reserved low or reserved liquidity right here. But before that, you can see how price around this particular high right here, around this low, and drove down all the way where into this particular fair value gap and failed to take out this low. And you can see that price moved in for going forward, has not actually broke past this high, nor has it broke past this particular low. So price has been trapped within this particular range right here. And some of you know what this is already. This is a dealing range. I've talked about this on this channel already. So for those of you wondering what the dealing range is, you can watch the video that will display on the screen right now, or the link in the description. But definitely I'm going to actually explain the dealing range still in this video. So looking at this, the question is that will go over your mind: why are the market makers actually having reserve liquidity, and how can I anticipate that? Like, what's the idea and the concept behind that? And for those of you that follow me for a while, I like explaining the concept and the idea behind a particular thing. I just don't come out and point out something. I want to show you why why that is actually happening in the marketplace. Especially for those of you that's gone through my mentorship, you know that that's one thing I like doing. I like giving you the concept and the idea behind why something is actually happening in the marketplace, and that can frame your understanding going forward in price action. So everything I'm going to be doing here is for a sell perspective. You understand? If we're in a bearish trend, and everything yet also cannot actually be inverted for a bullish trend also. So how can you spot a reserve low in the marketplace, or a market maker's reserve liquidity? The simple way is, you want to understand the trend. And if you go to the daily charts right here on this, the gold USD. So let me clear up that markup for clarity. This is the gold USD, is right here. So this is a daily chart, and this, mind you, I have spoke on this channel enough to time that how important the daily time frame, the weekly time frame, and monthly time frame is very important in identifying direction and being on the right side of the marketplace. So I've spoken about that a number of times. So, and that's why we're actually starting on the daily chart. So anything you see me do on a lower time frame, maybe it's in a recording video, just know that I actually started from the daily chart or from the weekly chart, depending on the concept and idea I'm driving home. So right here, you can see that price with a sell momentum has pushed down on the gold at this particular time in history. So we can see that this particular low took out this low. How do I know? Is that if you check the low on this candle, it came in at 1981.18, and why the low on this candle came in at 1981.72. So this particular low right here ran out this low. So at that region right there, running out this particular low right here, you can see what we have here. For those of you that have watched an institutional order flow video I have on this channel, this is what's known as institutional market structure shift. So we already have an institutional market structure shift once this low ran out this particular low. And we can see that from that region right there, we've had an impulse drive below these lows right here. This low actually attacked this low right here also. Let me use the crosshair. This candle actually attacked this particular low and also defiled this order block mean threshold right here, so almost getting and hitting this bottom. So we can see that we've been having somewhat like a bearish influence in price has been suggesting to us reasons to want to go bearish. And for the bullish momentum, we can see that it has been trapped within a range. You can see it on this particular bullish candle and this other bullish candle. And you can see on this particular day right here how price drived lower, but failing to take out this particular low, which we have identified earlier on as our reserved low. So we can see that from the daily perspective, we're already in a bearish trend. To further prove the point, we'll go down to the 4 hour time frame, which is an intermediate time frame for a day trading perspective. So if I draw this out in time, you can see clearly that that low now is obvious, that this particular low actually is obvious that it has run out this low. So this is that low from the daily time frame perspective, and you can see that this particular high that's pushed price down to this area, taking out this particular low. You can see that if I draw that out in time right here, you can see that it has not actually been defiled right there. So it's still very, very solid, suggesting more bearishness in the marketplace. But if you look to the sell side, you can see that we've been having lows actually being taken out right there. So this is a low from the 4 hour perspective. It has actually been taken out, but we can see that highs have actually been reserved in the marketplace. And now, except for this low, which is the market maker reserve low, and which is what we're trying to explain right here. So the idea behind the market maker reserve is simply that when we are in a bearish trend or in a bullish trend, you understand, the market makers want to conceal their objective. You understand, they want to manipulate the mindset and the behavioral pattern of traders to think that they are no longer moving in a particular direction. And by what are they going to do? They're going to hold price from hitting their key areas of target in terms of liquidity, their key objectives. You understand? And when we talk about liquidities for the market makers, it's simply previous lows and previous highs. You understand? So they're going to trap price from hitting those objectives quickly, because if they do that, they are going to really give out their positions that they are actually in the marketplace, and people are going to go in and start taking advantage of that. So what they do is they actually trap price. You understand? They will trap price and hold price from hitting that particular area. You understand? And the market into what is known as an accumulation phase or a distribution phase. You understand? But the question is, how can you spot that they are already moving into that program? And that brings us back to the earlier screen scene we had earlier, which is on the 15 minutes right here. So we can see on the 15 minutes that this is actually that reserve low right here, and price has failed to take it out. So when they're already in a bearish trend, for instance, which is the case scenario we are discussing right here, and they have a reserve low, what they do is that they create what is known as a dealing range. Some of you that traded, and this dealing range was actually formed on Friday, and some of you that traded on Friday, I brought this period separator in. Some of you that traded on Friday will know that we saw this low being taken out, and there was no reason for price to actually keep running high. And even when price ran high, it defiled this particular order block. So there was no reason for price to, if it had divided this order block, there was no reason for it not to keep on defying highs. And to think of it in another way, if it has taken out this low, it was no reason for price to actually keep retracing. I don't know if you're getting that, to start attacking other blocks. So it should actually sell. So there are two ways to look at it. You know what I'm saying? So it should actually sell. But what happened? We can see that price actually created this high within the London session, almost into the New York session. And what happened? They created a high and created a low. So what happened is that they pushed price above, attacking a high, push price low, attacking this low. What did they do? They created liquidity, accumulated orders about, they accumulated buy stops above that high, accumulated sell stops below these lows, ran the buy stops, and came down and ran the sell stops, creating what is known here as a dealing range. And why did they create the daily range on Friday? So that on Monday they can actually start accumulating orders, you understand, to fulfill their objectives. And one of them is attack this particular reserve low right here. You understand? Attack this particular reserve low right here. You can see on Monday, this is Monday price action. At the time of this recording, this is 11:38 p.m. Nigerian time, and which is on the 24th of April 2023. So you can see the way that they are actually holding price within this region right here on the Monday, on the 24th of April. And you can see that price didn't actually take out this high, nor take out this low of this particular dealing range right here. You understand? So for those of you wondering what the daily range is, the daily range is price simply running a high and running a low and forming what is known as a range. You understand? And that range is actually known as the daily range right here. So for further understanding, you can watch the video um, in the description box. So you can see how price has been trapped within this particular region right here. So this is them accumulating orders. So going forward, they can do one or two things. What am I anticipating? This is my own anticipation. I'm anticipating, and mind you, this is not signal. You understand? I'm not giving you a signal, any or service or anything. I'm just giving my own hypothesis and my own anticipation towards the marketplace, and they're all based on probabilities. You know what I'm saying? So I'm looking forward on the 15 minutes. I want to see price actually run out these lows, so run out these highs. Rather, those are equal highs, also known as double tops. You know what I'm saying? And also probably gets to this 1 hour, probably gets to this 1 hour mitigation block, because if you go to the 1 hour, you see the mitigation block right there. Mitigation block is price went higher, came down, moved higher, but failed to take out this particular high. So this low right here is a mitigation block, because there are buy orders here, the price that the market makers will want to come and fill. And if I go to the daily charts also right there, you can see that we actually have an order block right there. If I bring it across it, this is an order block, this is a bearish order block. So you can see that that particular mitigation block from the 1 hour rhymes with the mean threshold on this daily order block right there. So that's perfect price alignment right there. And so far so good. We have the low, let me mark that out. We have the low and the open price right there. So if I go back to the 15 minutes, this is what we're going to have right here. So we can see that this area right here, let me use the horizontal line. So this area right here, let me zoom that. Okay. So this line right here is actually the open price, and we can see that price currently is printing and probably will attack that open price. So if price defiles this open price, I want to see price come and attack these highs on the 15 minutes and tank at that mitigation block. You understand? Then from this mitigation block right here, I'll be anticipating a sell. I'll be anticipating a sell. That's at this mitigation block right here. I'll be anticipating a sell momentum to start coming into the marketplace, to start attacking lows again. Probably take out this reserved liquidity right here. You get, mind you, this is not like a must happen case scenario. Is actually probability case scenario, because I've actually studied price and see this reserve low pan out in this particular pattern. So I'm just teaching you that with the benefit of foresight. That's before it even happens. So I'm showing you on the gold USD. At the time of this recording, I've said that already. It's 11:42 p.m. and this is on the 24th of April. So you can probably, if you're watching this when it has already happened, you can leave your thoughts in the comment section or something. You know what I'm trying to say? So it's just an hypothesis that's in terms of my anticipation, but the reserve low, the strategy to which I arrived at is actually how it happens. You can go back and back test and see these things for yourself. So if you found value in today's video, is something you really found value in, and you know it's going to help you, you can hit the like button, hit the subscribe button, and there are more contents on this channel that are actually going to better improve your trading. You can actually check them out. We have the institutional order flow and market direction. We have the fair value gap series, different variations. We have the dealing range, which is part of the things we covered here. We have the market makers, AMD models, DMA models, and the rest of them. You know what I'm saying? A lot of them on this channel right here. And if you want me to actually cover something in this video you don't understand, leave your thoughts in the comment section. Or if you want me to cover or make a particular video specifically for you, you can actually also leave your thoughts also in the comment section, and I'll be sure to get right back to you. So I hope you find value. Without further ado, see you in subsequent videos.